Morning, everybody. Good morning, Sid. Good to have you back. Ron, Wayne, Connie. That's a new name. Welcome to the room, Connie. Red Eye, nice to see you. Haji's here. Jeffrey, posted in the room already. Gino, Rob, Alan, Algo, Joel, and Rickroll. Nice to have you guys. Hope everyone's doing well. Hope everyone's doing well. Guys, it's going to be a good day. Got some news this morning, huh? Man, I don't know if you're a NASDAQ trader, but that NASDAQ sure spiked. Today's Thursday, October 24th. I'm excited to have you guys in here. Good morning, Zorro. Excited for the day. We're going to get some stuff done today. We're going to learn some stuff today. Do me a favor. I know I have some new people in here. Guys, if you're new, raise your hand. Say, hey, I'm new. I'm going to look out for you today. Make sure that you're good, that you don't fall behind. I want to remind you guys before we get going, and this is for you people, that even you folks that are with me for a week, 2 weeks, something like that. Good morning, Steve Diego. Guys, welcome to being a student again. Welcome to learning again. Welcome to not having all the answers. And then when the information comes at you, it feels like a lot, but I promise you, it gets better each day. Clarity comes each day. And I will give you everything that you need to be successful with this software. And I'm going to teach you how to study it. I'm going to teach you how to use it. We're going to recognize advantages, guys, and I'm with you the whole way. Everything that we do with this software, guys, revolves around patterns. It revolves around patterns that repeat themselves each and every day, guys. It revolves around advantages. The first advantage that I give myself each and every morning is I make the choice not to trade into news, guys. So I open up forexfactory.com and I'm looking for high and medium impact news. We had unemployment claims at 8:30 a.m. made the market spike. Doesn't matter if it's good news or bad news, that red box says that the market may spike. So at 9:45, we've got flash manufacturing. PMI at 10 a.m., we've got new home sales, guys. Good morning, Erla. These are events that can create an emotional response in the market. These are the events that can create big pushes and really make the market go a little crazy. Let's look at, usually the S&P reacts around 8:30. It was a pretty good spike right up to a key area, and then it dropped. Have to go help a friend with some work? No worries, Jonathan. You're a good friend. So guys, write a post-it note, stick it to your monitor, have Siri set an alarm for you, whatever it takes to know when the news is coming. Man, my allergies are going crazy. I feel like I'm talking in a tunnel. Everything that I talk about today is going to come from the Nexgen page. When I tell you guys I'm going to give you everything, I mean it. I'm going to give you everything. I'm even going to brag about giving you everything before it's all over. All of your answers, guys. If you have NinjaTrader questions, the software user guide. Can you guys hear me okay? I want to see if we can get... Okay. Give me 1 second, guys. We're going to get Jim T taken care of. One second, please. All right, let's see. Jim, make sure the room is not muted. And let me go and find out where that is. Let me take a picture for Jim. Sorry guys, if you're new to the room, this is just a part of it. Get him squared away. Good morning, Miss Adriana. There we go. Guys, always speak up if you can't hear. It's real important to me that you guys hear what I'm saying. Kind of a big deal. I'm pretty smart. Um, there's the education access. Let's see if it says anything about the muting. There we go. I'm going to drop that in there as well. See if we can get them in. Wayne, you got me? Cool. I like that. Guys, the second tab from the education is the trading guide. So the first tab, this is your Ninja Trader how-to. If you have questions, let me know. Like if you need to scale charts, put in stops and targets, setting limit orders, building charts, all that good stuff is right here. So if we're not in class, always refer to this one. And then the second one is the trading guide. And this is where everything that I talk about, comes from. Wayne, are you saying hypothetically you're in 2 contracts and then you need to take one of them off? So hypothetically, I've got 2 contracts on, right? Are your targets the same in your ATM strategy? Do you have 2 targets right there? Or do you have it split? This is the easiest way, is to have 1 target. Okay, so it is split. So let's say hypothetically, I am in, let me go to this. I'm in a short trade. I'm not saying this is the right trade, right? And I want to take 1 contract off. The easiest way to do it is to just take that, put it to the other side,
target filled,
and it takes that contract off. And then you still have 1 remaining, and you can see that it adjusts your stop and your target.
order filled.
That's one way to do it. Let's say that you have a 2 lot and I go short. Whoops, and let me go short one more time.
Order filled.
So I've got 2 contracts on and I've only got 1 target. And guys, this is a little more advanced, but I want Wayne to be able to trade and do this. Wayne, what you can do is drop your order quantity to 1, and since we sold, right click below and put a buy limit.
Order submitted.
And what this buy limit will do is if it comes down and hits your buy limit, it'll take 1 of the 2 contracts off. See if we can make that happen. This is a surefire way to not get any down movement. Guys, this is not a real trade. And there it goes. So we could do the same thing. We could right click and do buy stop market 1. And if it hits that buy stop market, I mean, I am controlling the market right here. It's got to hit one or the other, right? So when it hits one or the other, Wayne, it's going to take off one of your contracts. And this is how you make the market stall 100%. Does that make sense, Wayne? That's the easiest way to do it. Is if you want 1 off, just move your target and get it. Cool. I'm going to get out of this one because that's just ridiculous going short right now. Guys, everything comes from this page. Jim, did you get me yet? Is he still in here? Did he leave? There's nothing worse than people that can't hear me and then leave. All the answers, guys. And I keep things pretty basic, to be honest with you. We're going to learn to read charts this morning. And this is my goal every day. I changed it up a little bit. I want to show this one first, guys. And there's an easy way to get good at the software. There's an easy way to get comfortable with the software. There's an easy way to build trust in the software. And guys, it's a high probability trend trade. This is the trade that I talk about every day for a whole hour. The high probability trend trade is a trade that typically wins 70 to 80% of the time. And the most important thing that a high probability trend trade does for you is it teaches you to read your indicators. It teaches you to look at your charts and understand what's going on. And it's real important that you accept this from day one. Reading your charts is about 90% of your day. Jim T, are you good? Can you hear me now? About 90% of your day is going to be spent reading the charts. 90% of your day is going to be hanging out doing nothing. 90% of your day is going to really just be relaxing, waiting for advantages. 10% of your day is going to be trading, guys. So if I spend 6 hours in front of my computer today, the likelihood is that I'm going to spend about 36 minutes trading, actually. But once you begin to recognize what your indicators are telling you, you're going to understand a few very important concepts, guys. You're going to understand where the market is most likely to continue. And these likely to continue spots are actually the entries for the highest probability trend trades. You're going to understand where the market is likely to go. This is going to allow you to set targets. And you're going to understand where the market is likely to stop, guys. And these are what we call termination conditions. And a termination condition is this big giant red flag that says, hey, don't take the next trade because you've reached an area that may stop the market. You guys are going to be able to learn to read your charts, and you're going to get really good at it if you focus on this high probability trend trade. It's only 3 rules. One of my favorite things, guys. It's only 3 rules. Each rule creates an advantage or creates the recognition of an advantage, guys. So rule number 1 is going to give you the advantage of momentum. And momentum is a market that's likely to push in the direction of the trend. Rule number 2 is going to make sure you don't trade into those big likely to stop areas, and that's going to give you a clear path. And once you have rule 1 and 2, once you understand these 2 rules, guys, it opens the door for a million things. You'll begin to see patterns, you'll begin to see more opportunities. You'll understand how to take more intelligent profits and when it's time to get out. So the first 2 rules, I think, are the most important in the beginning. Make sure that you're good with them. Make sure that when you look at your large charts, you've got these in place. And then finally, your third rule is specific to the high probability trend trade. And this is going to give you your entry. This is going to be your entry point. These 3 rules happen on only 2 charts. Even more specifically, the first 2 rules happen on the large chart, and they happen on the most current bar of the large chart. So you'll be able to look at your large chart, and really you'll do this in about a second or 2 once you get a little comfortable. You will be able to define the direction, the momentum, and the areas of the large chart, because the large chart's a very slow moving chart. It's a broad stroke of a brush, and it shows the overall opinion of the market. Your first 2 rules are met on the large chart, guys. The large chart leads the way. One of my favorite sayings. Well, inside of this 1 bar on the large chart, there's about 20 to 30 bars when you turn your attention to your entry chart. This is a smaller chart. This is a faster chart. This is the chart that defines exactly where the market is most likely to continue. This is the chart that takes this very broad stroke of a brush and whittles it down into those bars so that you can reduce risk, so you can maximize profit potential. And this is where rule number 3 comes in. This is where entry rules come into play. So only 2 charts, 2/3 of your advantages happen on the large chart, and only when you have momentum and a clear path should you look for the high probability trend trade entry on the small chart. We use these 2 charts because they're a reflection of who you're trading with or against. The large chart is the big crowd, is the men and women that have enough money to make things happen. These are the people that establish trends. These are the people that create momentum. And these are the people that react to those key areas on your large chart. That's how we define the areas on the large chart. When these guys say, hey, Nexgen user, we're going up strong, and there's not a darn thing in our way, we wait for the small crowd, the small chart. And guys, these people love to create little fights, little ripples, pullbacks that are counter to everything. And they fail typically 70 to 80% of the time. It could be intentional, or it may just be because the large chart's overwhelming them. You're going to be able to pinpoint exactly where their failure point is most likely to happen. This becomes your entry for the highest probability trend trade. This is how we reduce risk and really increase profit potential, because when everything says up here, we're going to let them fight, and then we're just going to enter the market right where they're most likely to fail. So our first hour every day, and I mean every day, is learning the trigger line and Fibonacci rules for when it's okay to trade. Guys, I go at whatever pace my brain goes at. If you have questions about anything that I'm talking about, if you have a need for help, if you need clarity, All you have to do is type into the room. All you have to do is type in the room and say, hey, you know what? I need a little help. And I'll stop, I'll pause, I'll make sure that you're taken care of. So we're going to learn these rules. I want you guys to simulate. Practice. Get in there. If you think you see a trade, take a trade. If there's something that you're looking at that you're unsure of, take a picture. Drop it in the room. Hey, Jim T, I see those messages. Can you hear me now? Give me a Y if you can hear me. I'm a worrier. I really want to know that you can hear me. Guys, practice. One of the most important things you can do is practice. But as you practice, take pictures. Take a lot of pictures. Annotate. Write on your pictures. Talk about what you see, what you did. Talk about the things that are working, the things that aren't working. Guys, I'm learning something new right now. Yesterday, I kind of surprised myself. I took 144 pictures yesterday. 144 pictures. Pretty outstanding, guys. The idea is that you post those pictures in the room, that you tell me what you see, and it just opens the door. It's a private session. You and I are going to have conversations about everything that you've done. We're going to simplify. We're going to talk about this high probability trend trade. I'm going to keep it very focused on this trade. The 3 rules, the 3 advantages, what they look like, how to study them, what they mean to you. You've got to learn these looks, and you've got to understand what they look like so it becomes easy, guys. And there's a little two-step process to becoming a confident trader ASAP. And it begins with being a chart reader, guys. So post your trades in the room. Tell me what you see. We'll talk about all of it. And then we also give you a spreadsheet. Every day we give you a spreadsheet. I say we, me and the mouse in my pocket, right? And the spreadsheet has 4 tabs on it. I'll drop it in the room right now. You do have a spreadsheet in the Nexgen Study Picks folder. It's downloaded when you download the software, but there's 5 tabs now because I built a new spreadsheet this morning, or I added a tab to it. The first tab is nothing more than a trade journal, and this trade journal is where every trade that you take, win, lose, or draw, goes into this tab. You should be annotating the charts, talking about what you see, what you did, why you did it. You can talk about the advantages, and then this is the feedback section, guys. This is where when you post in the room, that private session between the 2 of us, I'm going to give you my 2 cents on it. Sometimes it's a way to find a better entry, to take a better exit. Sometimes it's just helping you identify some of the problems that you were trading into. Sometimes it's just a big virtual high five. But the idea, look at this, new page, is that every day, every morning, you go back and look at what you did yesterday. And you say to yourself, what worked and what didn't work? And you're creating this awareness of patterns that are bringing you success. And you're creating this awareness of patterns that are taking that success from you. One of the things that I'm pretty good at, and it's a little annoying, I know it is I'm going to recognize the patterns in you. If you post in my room, if you give me 3 or 4 charts, guys, I'm going to have locked on what your tendencies are. Whether it's to break rules, follow rules, get in early, get in late. Whether you are the type of person that likes to fool yourself by annotating your charts incorrectly so that you feel better about the rules breaking that you did, guys. And I will comment on all of it. There's links over here, how to paste your trades into the spreadsheet. And guys, there's even a link on how to annotate your charts to get good fast. I stole this from a Nexgen user, and she was amazing. And she would always talk about where she was coming from. And she would not only identify her rules being met, but she would take the time to annotate why they were met, what the look was, and how that proved that her rule was true and her advantage was present. She would always tell me where she entered, and then she would show me her exits, guys. And every time I get a chart that looks like this, we'll discuss each of those 3 elements, and you'll know whether or not you're following rules. And following rules is the goal because the rules have been proven to win more than they lose. The 101 tab is each rule for the high probability trend trade broken down individually with annotated pictures showing you exactly what it looks like, exactly what it means to you, how to identify it. But it shows you when the rule is met and when the rule isn't met. And when the rule is met and it isn't met, guys. Know the difference. There's favorite looks where you're going to begin to build your trading plan as you begin to recognize these patterns, as you make them easy. Make sure the ones that are bringing you success end up in this section. Study them, commit them to memory. That's what slows the market down. You're going to have to learn to manage it. You're going to begin to see things, guys, and you need to avoid those termination conditions because this is the most broken rule out there. I want you to make your section, the favorite look section, look like the client trade section. This is where when you guys do great things, I like to steal it. And there's almost 400 pictures of Nexgen users doing great things with momentum, with clear path, and with defining their entry area. There's a long and a short trade, the high probability trend trade entry that shows you exactly how to pinpoint your area, tells you exactly where to put your order. For you NASDAQ traders, it's a one picture thing to get you on the right page, and then you can always post your NASDAQ charts in here. I don't mind talking about them. There's a section dedicated to management for when you start moving outside of the most basic plan, but until you're ready for that, I've given you the most mechanical management beginner plan ever that's designed to get you paid. There's patterns that repeat themselves, guys, and I think this is the one that if you really get into taking pictures, you're going to fill this up and drop it down 300 paces because you'll be amazed at what you begin to see once things like momentum and a clear path become evident. And then again, I filled out a lot on the termination conditions here just to help out. So we're going to learn the rules. You guys are going to practice and show me what you're doing. We're going to keep going through. Repetition is the key to recognition. And we're going to start at rule number 1 because it seems like an appropriate place to start. Guys, large chart, the big chart, the slow chart, the large crowd has to give you strong trigger lines. Strong trigger lines create the advantage of momentum. This is the first piece of the puzzle to finding that high probability trade. So we're going to let the large chart define trend first. If the background on the large chart is green, the market's moving up, guys. We're looking for rules to be met for high probability trend trades. And let me remind you, right now we are talking about the best case scenario for new users. We're talking about the path of least resistance, the way to optimize your chances of success, guys. When the background is green and the trend is up, in order to have strong triggers, my small triggers, these solid lines, and my large triggers, these dashed lines, they're going to work together to create that momentum, guys. When the small triggers are up and above the large triggers are widening. And there's space that gets created between the two, guys. Looks like scissors that have just opened. When the scissors open, when the space is created, the odds are favorable for the market to continue up. This is what we call odds favorable momentum. This is the exact visual of what strength looks like when you use the trigger lines. And it's universal. So strong triggers on your large chart is rule number 1 being met for the high probability trend trade. Strong triggers on your small chart is a confirmation of the momentum. Small triggers above the large triggers on a range chart, a week chart, a day chart, guys. It always means strength. When the background is red, you're in a downtrend. Small triggers break below the large triggers are widening. The gap between the two, those open scissors, lets me know that the odds are favorable for the market to continue down. You're going to hear odds favorable momentum in this room all day long, guys. Strong triggers up. Here's your cheat code. In order to have strong triggers up, your background is green, your large triggers are green, your small triggers are green. That's not a rule, that's just something you can notice. Background is red, large triggers are red, small triggers are red. These moments where the trigger line colors don't match one another or even the background, that's not strong triggers. It just can't be. That's not how the software is built. So strength up, strength down, and then guys, when scissors close, when the small triggers work their way back inside, this is what we call a weakening of the large triggers. And when I have weakened large triggers, anything can happen up or down. I was an English Lit major, ladies and gentlemen, and I really believe that language is important. So when I open up my large chart and I look at it, I want to be able to say to myself, the odds are favorable for this market to continue up because I have strength. And I don't want to be able to say, there's weakness in the triggers, anything can happen, guys. So odds favorable versus anything can happen, strong versus weak. It's important that you know the difference between the two because weak triggers can cause big retracements. When they reach areas, the areas are more likely to hold. Strong triggers push the market. Strong triggers can break key areas, and strong triggers can even cover a lot of the mistakes that we tend to make is new users. So I'm going to go to crude oil because it's moving just a little bit better. And I want you guys to see this. We're going to get lessons without ever taking a trade. I'm going to do this right here, and I'm going to take a big picture. And I say it a lot, and I firmly believe that the easiest way to get good at being a day trader, a chart reader, is taking pictures rather than taking trades initially. So when my small triggers break above the large triggers, that is strength. When they're inside, it's weakness. When there's separation, it's strength. When they're inside, it's weakness. And you'll notice that strength was enough to break an area to push the market. Weakness was enough to give me a big untradeable retracement. Strength was enough to push everything down to break an area. Weakness is right where that retracement happened and right at a key Fibonacci area as well. So I'm going to ask you guys real quick, is everybody good with the idea that the most current bar on my large chart will define momentum? And I'm going to ask, does everybody see small triggers above the large triggers? The large triggers are wide, they're angled in the direction of the trend. If this were my most current bar, the momentum would be good. Let's go see what the most current bar says though. The most current bar says that my large are up and my small are down, that my background is red but my large are green. Ladies and gentlemen, this can never be momentum. So rule number 1 is not met. Is everybody good with that? Joel is. He said yes. What about the rest of you? Brand new users. This is an important lesson for you. Momentum. Momentum is that one that I don't want to do without. Once I have it, we'll have to make sure that I have a clear path. Guys, momentum is great, right? But if I'm driving my car 100 miles an hour and there's a brick wall in front of me, I'm probably not going to get through it. That's where rule number 2 is going to create patience and save your bacon pretty awesome, guys. Termination conditions, those Fibonacci-based indicators that may stop the market. Can't have any in the way, guys, because when there's none, I'm going to have room to my profit targets. When I have room to my profit targets, I'm going to call it a clear path. This is my second advantage. And I'm telling you, when you couple these two together, life is good. Still on the large chart. Horizontal lines on the large chart can stop the market. Horizontal lines on the large chart, guys, this is where the large crowd is making decisions. And I had such an amazing talk with someone that we'll talk in a little bit about the decision-making process in these areas. And Ron, you'll like this because it has to do with your trade. So these areas are where the buyers may buy and where the sellers may sell, where fights may happen, where reversals can happen. We're looking for magenta lines and cyan lines. And these are what we call divergence lines. And divergence is a big polysyllabic word that says, hey, guess what? There was a loss of momentum right at this key price. That's all it is. If price goes up and down, momentum doesn't follow, guys, you're going to see a pink line or a blue line. We're going to use these lines to define areas where the market may reverse. We're going to use these red fibs, these Fibonacci areas. And resistance is red, and when you have resistance and the market's trending up, this is an area that may stop the market, that may create an untradeable bounce. This is one that could reverse the market. And guys, this is where decisions are being made. And these support lines are where decisions are being made. And these yellow 1-to-1s are where decisions are being made. So if we're going to define a line as a termination condition, the first thing that you have to do is let price reach the area. Why do we do that? Because who is 4 cars back in the McDrive-thru ordering a quarter pounder, right? No, you get to the window, you get to the area, you get to the decision-making zone. And guys, if price reaches Fibonacci resistance and your triggers remain below, this is an area that may stop the market. It may create an untradeable bounce. It might even reverse the market. And if it does reverse the market, we're going to call it a strong top. But here's the crazy thing about trading that I didn't want to accept, and it took me a while, is I never know what's going to happen. I never know if it's just going to break or hold. I don't know if it's going to dance and then run. The only thing that I'm sure of is that if I have this look 100 times more often than not, it's going to stop the market. More than 51% of the time, the market is probably going to take me out of any long position that I try to take, which means I'm not trading into these areas. And if price comes down to support, the only thing I have to do is ask myself, where are those trigger lines? The T3 trigger lines are going to tell me what I should be doing. And if they remain above support, they say, hey, don't do it. Don't go short. Don't trade into this area. It might create a bounce. It could create a fight. You'll never know. But more often than not, you're going to lose money into this area, guys. And our goal is to make money. So no trades into resistance. No trade into support if the triggers don't break. If resistance reverses the market, large triggers roll. Or support reverses the market, large triggers roll. Ladies and gentlemen, we have a strong top or a strong bottom, and this is the precursor to the highest probability trend trade that you can take. When the market reverses from a key area, when that decision was so impactful that everything went the other direction with strength, momentum, and an entry area, that's the one that typically wins the most. Areas break, typically with strength, guys. So let's go through the life cycle. Price reaches Fibonacci support, my triggers remain above. All of us choose to sit on our hands because why hope, right? What a horrible trading plan. So we sit still, and we sit still for almost 10 bars. But then my small triggers and my large triggers get below support. Support is now broken, and my path is now clear until I reach the next line. Price reaches resistance. All my triggers are way down here. Guys, it's almost 15 bars until both the small and the large get above resistance. Resistance is now behaving as support. My path is clear until the next area is reached. And guys, this is the core of understanding termination conditions. And I want you to see, we'll do it right here because, oh my gosh, what great examples. Let me take a picture. I don't even have to take a big picture for you guys to see this. Support was reached, the triggers remained above, absolutely no more short trades. Resistance was reached, all the triggers were below, absolutely no trades. Oh, no worries, Adriana. I'll go through them when we start going through pictures. If you're on your cell, cool. And you know that if you ever miss it and you have a question, just send me a message. Guys, straight to support. None of the triggers broke. Right up to resistance. None of the triggers broke. Can you give me a why? This is the last hour and 30 minutes in crude oil, guys. This is 90% of your day. 90% of your day is saying, I don't have momentum. There isn't a clear path. I choose not to look for a trade. And then this is where we find out who has a little self-confidence. Who lost a trade into one of these areas? Who lost a trade without momentum? Anybody? I would have as a brand new user. I would have lost about 32 trades in there because I'm excited and I'm making mistakes. And if you did, guys, just post it in the room. Let's talk about it. Can you give me a why if you're good with me? It's either a termination condition or a clear path. It's either rule met or rule not met. Guys, this is the easiest way as a brand new user, I promise you. And once you get good at this, give it a week or two. What happens is you open the door for the next trade, guys, because you understand momentum after a week in this room, and you understand that momentum can break areas, and your triggers are going to show you that potential. And when your smalls break through an area with momentum, with that odds favorable momentum, but your large triggers are kind of lagging behind. They haven't gotten with the program. They're still above that area of support. 50% of my triggers are through. 50% are not, guys. And yeah, we call this the 50-50 trade. How easy is that? And guys, on these 50-50 looks, you're trading the potential of the area to break. But since it's not broken yet, it's nothing more than potential. And if it's just potential, ladies and gentlemen, it cannot be a clear path. It cannot be a high probability trend trade. So this look right here is going to be your second look. This is going to be your second trade. This is the trade that you're going to have to do a little more research on. Because sometimes areas have the potential to break and they don't. I'm going to give you a plan how to take this one, and I'm going to give you a plan how to avoid that loser. Look at this. Termination, termination, termination. It just keeps happening. Resistance breaks and it pulls right back to support and continues up. Pretty cool, right? Support to the tick, support, divergence low, divergence low, divergence high. And you're probably thinking to yourself, how the hell am I ever going to trade? How am I ever going to make any money if there's all these darn lines? Guys, I promise you, they do break the opportunities come along. But there's going to be times when your path isn't clear because your areas are stacked. You're going to have support after support after support. And that fear of missing out is going to grab hold of you, and it's going to say to you, Gino, just take the trade. What if it breaks? Morgan, why are you letting one line scare you? And guys, your answer has got to be each and every time, I don't have a clear path. My advantage isn't there, guys. My money is worth having the advantage. Don't do it. And guys, I'm going to tell you right now, I had to trade into about 1,000 of these lines and lose trades before I finally got sick of losing my money into them. Everybody learns at a different pace, guys. I tend to be the slowest pace, the lowest common denominator. But the cool thing is that these Fibonacci areas on your large chart, guys, these key areas give you the ability to see exactly where the driving forces of the market are likely to make decisions, guys. And very often, rule number 2 can keep you out of consolidation. It can keep you out of choppy markets. It can keep you from hoping the market's going to go rather than saying, hey, the market is gone. And once you have that momentum and a clear path, guys, that's when life gets easy. That's when these trades really fall into line and they feel effortless. And look at that. That's the old one. So where are we at right now? Term to term to term to term to term. And look at this. Now they're trying to break out. Not only did rule number 2 define exactly, golly, I'm struggling, exactly where we needed to break out of, now our indicators are telling us that we're starting to break out of that range with momentum, but it's only the potential to break the range, and son of a gun, there's a line right behind it. So momentum leads the way. Clear path keeps you from that untradeable bounce more often than not. Clear path gives you room to your profit targets, guys. And once you have these two, it's time to look for an entry. It's time to go to the small chart, that refinement chart. Let's pinpoint where the market is most likely to continue with that trend, with that momentum, with that clear path. And I'm excited about going to see an entry. And if I see this, if I see 3 divergences in the same price range, guys, I have to hit the brakes. I have to say, whoa, this is 3 losses of momentum right in the exact same area. This is your small chart telling you that there's some change coming. I know the large chart says down. I know the large chart has a clear path. But hey, let me show you 3 losses of momentum in the same range. This could push the market up a little bit, guys. With weak triggers, it becomes stronger. With a higher final pivot, it's even stronger still. And you're going to be able to use these 3 divergences to help you pinpoint areas like, let's see if we can find like a good example. I'm going to put a box at a point where the market turned not at a fib. And I'm going to put a box at a point where the market turned without really having a fib. And then I'm going to open up a small chart, a fast chart, and we're going to go find those boxes and just see what the divergence situation was. And I don't know, I didn't pick this. I didn't hand pick these. I'm literally flying blind here. This one only had 2, but it had weak triggers on the large chart. This one had 2, second lower, also had weak triggers on the large chart. There's 3, a little bit of a pushback. Well, not a lot of great examples on crude oil, huh? There's 3, little push up. There's 3, big push down. So, guys, this is the only time, look at this, breaking out of the range, 1, 2, 3. This is current. As they tried to break out of that range, there's those 3 divergences in the same price range. And now what we're doing is we're seeing a market with momentum, almost hit the line, but didn't. And this is all the information the small chart's giving you. So guys, rule number 2, the only time it's not met on a small chart is 3 divergences in the same price range. That's it. It's pretty simple. If you don't have 3 divergences, don't let your small chart talk you out of an entry. If you don't have 3 divergences, guys, but you do have momentum and a clear path on the large chart, it's time to get into the market. And we're going to do that by using a limit order to buy or sell a pullback at an area inside of favorable large triggers. It's kind of wordy. I know it. Um, we're going to use a limit order. We're going to pinpoint with such precision that we're going to wait for the market to come to us. We're going to do it at areas. We're going to buy or sell a pullback, that little fight by the small crowd. And we're going to have that limit order waiting at fibs, mid-bands, or yellow 1-to-1s, horizontal lines on the small chart. And the key is that they're inside of triggers, guys. And these triggers are a huge part of the success of this entry, because price returns to large triggers. No matter what time frame, no matter what size chart, no matter what market, price typically returns to this large, slow-moving average. News in 5. Thanks, Gary. So anytime this retracement starts, I can look at the triggers, large and synthetic, and say, hey, this is where the price bars are most likely to return. And guys, you're going to use that idea not only for entries, but also for management. Price returns to the large triggers. When I have areas inside, it's like having a brick wall and I'm kicking a soccer ball at it, guys. These areas inside of the favorable large triggers are where we expect the bounce. And they're favorable because the correction spot on the large chart and the small chart are overlapping in the exact same place. It takes a lot of the indecision out. So favorable large triggers means that the large and the synthetic are wide. They're angled in the direction of the trend. And guys, this is going to give you the smallest window of opportunity for entry. So when you look at your small chart, you can say to yourself, the small chart price may return back to the large triggers, but you have to throw into the equation the large chart may retrace back to the synthetic triggers. Those are the large chart large triggers. So anywhere from the top of the triggers to the bottom of the triggers, this is where these price bars may return. But the areas inside are where I expect to bounce. So on my small chart, inside of those large triggers, I have fib and yellow 1-to-1. Inside of those synthetic triggers, I have a mid-band. And guys, this is you defining exactly where the market is most likely to continue. And it could be any of these three areas, which is why we're going to create what we call the window of opportunity. I like that. It's the woo, you Ric Flair fans. So when the large chart says up, the trend is up, I'm looking for rules to be met for a high probability trend trade. When the large chart has odds favorable momentum, a market that is likely to continue in the direction of the trend. When the large chart has absolutely nothing in the way, so my path is clear, I'm going to turn my attention to the small chart. Let's take a picture of this one and go through it a little bit. And on this small chart, guys, there's a couple things that are going to happen, and we all go through it. From about right here until about right here, you're going to have to work through the fear of missing out. You're going to say to yourself, man, it's going up strong, there's nothing in the way, and I'm not getting paid. Maybe I should jump in, maybe I should hop in, maybe I should hope that it just never stops and never creates a retracement like it does 99% of the time every day. So you're going to have to learn to sit on your hands a little bit as a brand new user. When you grow as a user, you may find an opportunity here, but we're going to focus on the best of the best. So you're going to wait for a reversal bar on your small chart, a red bar after all of those green bars. For those of you that did jump in, this red bar represents a loss of momentum as an outstanding opportunity to exit your trade. Because once the reversal bar prints, guys, the fight is on. The pullback has begun. The small crowd showed up, and they can't wait to mess up your good time. But the reversal bar is not my entry. The reversal bar says, hey, let's find those trigger lines. Large and synthetic, one on top of the other, favorable. And these trigger lines define, where Mark is most likely to use the wrong drawing tool. These trigger lines define where price may return. From the top of the triggers to the bottom of the triggers, guys, this is where price may return. And this isn't my entry. I need areas inside of favorable large triggers, because the areas inside of those triggers represent the points where the market is most likely to bounce. So this blue shaded area becomes the window from the highest point of support to the lowest point of support. But I want you to remember that the large chart is odds favorable momentum screaming in the direction of the trend, and there is no termination conditions, nothing to create a bounce. You're going to activate a limit order right at the top of this window, guys, because we're not going to trip over a couple pennies to save a few dollars. We're going to get in at the highest point of support inside of favorable large triggers. This is the most likely the first spot where the market may bounce. And guys, this is your entry for the highest probability trend trade long. If the rules are met on the large chart, let's go through a couple things. Does this divergence keep me from taking an entry for the high probability trend trade? If I have momentum, if I have a clear path, one divergence, one loss of momentum doesn't scare me. That might be exactly what I need to get back to my entry. If I have momentum and a clear path on my large chart, these small triggers rolling don't affect me. That little loss of momentum may be exactly what I need to get back to my entry, guys. Don't let the small chart talk you out of the perfect trade. If everything's going down, if the momentum is there, if the path is clear, guys, wait for the reversal bar. It signals the fight. Find your triggers. It tells you where price is likely to return. Find an area inside it's most likely to create the bounce and activate that limit order just below the entry area. Guys, this is your high probability trend trade. This is what I talk about every day. Every stinking day for the first hour. You guys want to see if the S&P reacts to news at 9:45? Every day we talk about momentum. We talk about a clear path. We talk about entry areas. Did it react? Yeah, it did. Look at that. Isn't it just now happening though? 9:45? Where are we? We're 9:45. 3 divergences in the same price range, even on a large chart. Look at that termination condition. That was your reversal. Pretty cool. You guys knew not to go long into that area, and sure enough, it reversed the market. That's a strong top. And I bet there were some of you with that odds favorable momentum and clear path might have found an entry off that strong top. So sit on hands at news. Amen. So guys, are there any questions about the high probability trend trade? Are there any questions about momentum, defining a market that's likely to continue? This is the easiest lesson. This is the one that says, hey, the market is screaming. It's just one look with trigger lines. Rule number 2 takes a little bit of study. You've got to go through that. Price reaches an area where my triggers process. This one takes a couple. And then finally, you have to define your entry, guys. That point where the market is most likely to continue. The easiest way to do it is to use the language, area inside of favorable large triggers. Wayne says, Mark, you gotta look at this one now. Wayne says, odds favorable, trade plan not actual. Pull back to the synthetic. Sell the limit just below. Pull back to synthetic. I don't know what that is, Wayne. Momentum is leaving town, set target just above fib. So Wayne, you're saying that with all of this momentum and nothing in the way, you can find an opportunity to go short with that momentum and get out at a key Fibonacci area when momentum starts to slow down? Poppycock. Why don't I teach that? That's a good idea. I like that. Guys, you've got to define your entries. You've got to figure out where the market is most likely to continue, because what it does for you is it sets you up for management. Your initial stops are going to be placed where the market shouldn't go. And I love that phrase, where the market shouldn't go. And I hated John Novak for that phrase when I was brand new, because I never bothered to learn where the market was most likely to continue. How the hell could I know where it shouldn't go? Guys, if that trend trade is going to be a winner, that market shouldn't go 4 to 5 ticks above those trigger lines. And that's where the lesson of price returns to triggers pays dividends. It shouldn't go 4 to 5 ticks above these trigger lines. I call this the wrong side of the triggers. And once you get beyond those trigger lines, guys, your advantage is gone. You have absolutely no idea how far that market's going to push. And once you get 4 to 5 ticks below these trigger lines to the wrong side of the triggers, guys, you have no idea how far that market's going to push. So any lines beyond the triggers, not in the window. Any lines beyond the triggers have nothing to do with that trend trade. This stop If they get beyond those triggers, 4 to 5 ticks, guys, you're going to be out of a trade. You just took a loser. Not a loser, but I bought software, Mark. Guys, anything that wins 70 to 80% of the time is obligated to lose 20 to 30% of the time. This is a high probability trend trade. When you start incorporating medium probability trades, don't be surprised if your win percentage goes down a little bit. It's okay, because intelligent stop placement minimizes losers. The ability to understand momentum and clear path maximizes winners, guys. And what happens is, more often than not, you get one of these reversal bars in the direction of your trade. We call this a confirmation bar. You're going to reduce your risk 2 ticks above it, 2 ticks below it. And it's not uncommon to see you guys taking the best of the best trend trades, sniper entries, and then it just doesn't work out and you lose 20, 40 bucks instead of 2 to 300, like people who put their stops way down here, just hoping it magically reverses from the middle of nowhere. Guys, this is what we study every day. This is what we talk about every day. Every day we break it down. I try to keep it as simple as I know how. We talk about 3 rules. And not only have we talked about 3 rules, we've shown them individually. We've talked about what they mean to you, how to identify them. We've kept it on only 2 charts. You know exactly which chart leads the way. And now I'm going to give you some good stuff, guys. The way to get to where you want to be, the absolute fastest, is you have to be able to recognize these patterns quickly. This is 101. This is 101. So Rob, you say obviously what you're seeing isn't working. So if you write stuff, you feel like you'd be reaffirming the wrong rules. So Rob, let me change a perspective on that. As I get in, my stop gets hit. Do you feel like this is reaffirming the wrong rules? And guys, I'm going to show you the magic of annotation. Rob, you keep wanting to talk about why shit doesn't go right, right? Oh, I lost, this sucks. What direction is the market going? It's going down. What direction are the large triggers? Down. What direction are the small triggers going? Down. You don't even have synthetic triggers on your small chart. And Rob, you said with everything down, I'm just going to jump in long and hope this shit works out. Didn't work, did it? Pardon my French. But you didn't write one rule. You didn't identify direction. You didn't talk about momentum. You didn't talk about why you entered there. You didn't talk about why your stop is 5.25 points below. So Rob, I've said it a million times to you. I'm just going to say it again. Until you start writing your rules on your chart, you're going to struggle. What do you mean? What synthetics on your 5-1 do you need? So, and Nanda, this is going to answer your question as well. Every day I talk about entries, ladies and gentlemen. Every day I identify favorable large triggers. Every day I say that there's large triggers, and Nanda, the large triggers are the large triggers on the small chart. These are the triggers that you're going to use to gauge the momentum on the small chart. Separation between the small and large, magical. I've got the best momentum ever. The synthetic triggers are these stepped triggers, and these step triggers are the large triggers from the large chart. So let me open up a workspace real quick. Let me show you. Man, I got a lot of stuff open. Here we go. So check it out, Nanda. And we'll use this as an example. Price returns to large triggers. So my large chart, large triggers are where I expect price to return if I get a retracement. And that's this box right here. Look where it shows up on the small chart, right on the synthetic triggers. Well, my small chart, here's my large triggers on my small chart. Price may return there. So Nanda, we take the large chart, large triggers, and we superimpose them onto the small chart. And when they are one on top of the other, this is precisely where the market is most likely to return, because it's got both the large chart and the small chart correction point. Does that make sense? You're welcome. And this is how we define our best of the best area. And the best of the best area is always inside of favorable large triggers when they're one on top of the other. Because look on the chart, large chart, look at the distance between the correction points. And then conversely, I'm not saying that this is a trade, but look at it when they're one on top of each other. It's the difference between having a lot of indecision and having a very concise, consolidated point. Awesome. So, guys, if you're trading and your rules say pull back to an area inside of favorable large triggers, still waiting. I'm sorry, Rob. Am I putting you out by answering someone's question before yours? Right-click on your chart and go to templates and load. And let me give you a picture. You want to load Nexgen 5-1 Renko bar chart. And that's going to put your synthetic triggers on it. And guys, if you're a NASDAQ trader and you need those synthetic triggers for your entry chart, just two birds with one stone. NASDAQ futures 13.2 dynamic Renko bar. These templates make sure you have synthetic triggers for the most accurate entry. There you go. And I'm sorry, that was a little snippy, but guys, I answer in order, right? And sometimes you're not going to get the answer you need right off the bat. Be cool with that. I'll get you. I'll get you. I always do. I always have. And that's how you get those synthetic triggers on there. So one of the things, and one of the reasons why I say this, guys, is because if your rules say inside of favorable large triggers, right? But the look on your small chart doesn't provide you favorable large triggers, you got to go, whoa, something's amiss. Something's not right. That's not my right chart. That's not what I'm doing. So you've got to learn looks, guys. You've got to learn them, and you've got to be able to learn them fast. The easiest way to do this, so this is for Sid, Jim, Nanda, all you guys that are brand new. We all want to be traders. We all want to be in trades. We all want to be active. The fastest way to getting to where you want to be is not being in a trade as a brand new user, but taking pictures of the advantages that you need to get into a trade. Take pictures of strong triggers, and then take pictures of weak triggers, guys, and make sure that you know the difference between the two, because one of them gives an amazing advantage and the other one's going to screw you more often than it doesn't. Take pictures of the clear path and the terminations. Know the difference. Understand what it looks like and where your entry goes. Guys, and this is only 140 pictures. I took this many pictures yesterday and wrote on every one of those charts because I'm learning something new. And guys, my money is worth being good at it. Once you take these pictures, you write down the whys. Go to your 101 section and start filling this thing up. And you've got to put the whys. You've got to annotate. You've got to say, everything is red and my smalls are below the large and there's space between. This is strong triggers. This is odds favorable momentum. This is it, guys. This is the look. Always. This is strength. Go take 25 pictures of that look and see if you ever mistake it with that weakness, with those smalls inside, with that anything can happen look. And look what happens after. You're going to start to build that trust as well. That this takes away your good time, that this removes your advantage. So guys, go through this process. It's going to pay dividends. And if you're not sure, if you're saying to yourself, well, Mark, I'm brand spanking new, how do I know if I'm taking the right pictures? I'm going to give you this as well. Guys, this is your high probability trend trade checklist. This is an actual checklist to get you into the best of the best trades. So the first thing is the market coming from that strong top or bottom? But it reminds you that you can take a high probability trend trade without it. But this termination that reverses the market, guys, this is the warm fuzzies that you need to just feel awesome about taking that trade. This is exactly what momentum looks like, and this is exactly what it looks like when it goes away. Here's your termination condition. Here's your potential to break, and here's your broken clear path until the next area. And then guys, this is your entry. This is your best of the best. This is your pullback to an area inside of favorable large triggers. And if you commit this look to memory, don't you think you're always going to want 2 sets of triggers there? Maybe. Guys, the second page, this is where I want you to use these rules, not only to enter the market, but I also want you to write this on your chart. I want you to define the momentum. Did you have it? Did you not? I want you to define the termination conditions. Were they there, or was it a clear path? And I want you to use this phrase right here. And I'm telling you right now, this is the phrase that's going to have you picking out your entries like a boss. Area inside of favorable large triggers. I know, right, Ron? Area inside of favorable large triggers. If you write that on your chart, guys, you're never going to get into the market on the wrong side of the triggers unless you willingly and knowingly break your rules. So I'm going to give you this one too. And then I'm going to give you a KISS plan. In the KISS plan is a stepping stone in your learning journey. The KISS plan, guys, this is your first trade. This is not your only trade. This is the trade that sets the tone, that teaches you to read your indicators. This is the trade that typically wins more than it loses. Rob, your link's not coming up. Let me kill all of this and let's do a quick tech check. There we go. Now you have them. Now you've got large and synthetic, and now you have a better chance of success to find the trade that you need. Good job, Rob. Guys, this is not your only trade. Once you learn this trade, you're going to see patterns. Once you learn this trade, you're going to see things that you never even knew you were looking for. You're going to see things that bring you success, things that take it away. But in the beginning, this KISS plan optimize your chances of success with a high probability trend trade. I'm going to give them all to you in just a second, Jim. I'm going to drop these not only in Microsoft Word, but also PDF. You're welcome. And I do this every day, so if you ever miss it, Jim, I promise you, my first hour is the same every day, because I firmly believe that if you hear the same thing 20 or 30 times, eventually it starts to stick. I'm a daydreamer. I miss things in the first couple rounds. Guys, this one's designed to optimize your chances of success, to give you a trade that typically wins more than it loses. This is the one that's going to teach you to read your indicators. This is the one that's going to give you that win percentage that creates confidence. And then through simulation study, class feedback, and continuous practice, ladies and gentlemen, you will create your own plan. Until you have the ability to read indicators, this is a solid plan. And your simple plan for consistency, let's just go ahead and do this one real quick. Repetition creates recognition. I've even got Ron saying it, so you know it must be true. Guys, don't fight the large chart. I can't stress this enough. This is how to commit financial suicide, guys. One easy step. My brother wrote this book. And there's only one page that has information. All the other pages are blank. Guys, chapter 1, your warning signs your friends are in trouble. They are trading against strong triggers. They are trading against the momentum that was created by the large crowd. They're trading against the momentum that says everything is going the opposite direction. We do not have to be first, guys. We're better than that. The second thing is trading in determination conditions. Guys, this is the recipe for financial suicide. These are the two most common mistakes: fighting those triggers, trading directly into areas. And if you can eradicate that from your plan right from the get-go, you are better off than most traders out there. And I'm going to show you this picture real quick. This is for Ron. Remember that the market doesn't care about you. Remember that you'll never influence direction. Guys, oh no! Here, Jim, let me give you these real quick before you go. Do you want Microsoft Word or do you want PDF? Word? Cool. Let me give you these real quick. Whoops, it gave you the shark picture too. You don't have to download that. You can drag these right over to your desktop. I'm also giving you my PowerPoint, Jim, all the pictures that I used to teach the class. Go through these. If you have questions, feel free to reach out to me via Discord or from my email on the contact page. I know that you've got a 3-day break, but if there's anything that you need, don't hesitate. It's good to have you in class. Guys, this is the dude or the dudette. Momentum is established by the big money investors, guys. Clear path is given to you by the big money investors. We're remoras. We're going to let them saw through a tuna, and we never have to be the first one. We never have to go make that kill. We just grab ours. We grab that little bit from all of their hard work, and I promise you, it makes life easier. Don't fight the large shark, guys. Define your entry. Figure out where the market is most likely to continue. Ask a million questions. Pinpoint your entry. Because once you can define where the market is most likely to continue, guys, you understand that concept of where it shouldn't go. And let's bring this one up. Once you can define this area, once you cement the words in your head, that anything on the wrong side of these triggers is where the market should not go, that anything on the wrong side of these triggers is exactly where my first stop placement needs to be. 4 to 5 ticks above those trigger lines, guys. And once your stop is in place, there's nothing for you to do. You're either going to get stopped out. 2 to 3 out of every 10 high probability trend trades, you will get stopped out. It's a cost of doing business. But guys, more often than not, with all of that momentum, with that clear path, with that beautiful entry, the market is going to bless you with a reversal bar in the direction of your trade. This is your first stop movement, guys. This management plan is in the KISS plan, word for word, exactly how to move your stops and how to get paid as a new user. And then guess what? You will create a plan tailored to your personal goals based on your experience reading the indicators, guys. This is not the only management plan. This is the most mechanical plan to keep you from making emotional decisions. So I'm 2 ticks above the bar, and I'm either going to get stopped out for a smaller loss, or it's going to go to my first target. And I can't stress this enough, guys. The KISS plan is designed to get you paid. The KISS plan is designed to get you paid quickly. To take an entry based on advantages and take your first exit only $100 away from your entry. And most of you say, dude, Mark, I can't get rich on $100. Man, if you step over a $100 bill on the sidewalk because it's not 200, you're a fool, right? Get paid. Because once you get paid, your palms aren't so sweaty. Once you get paid, the butterflies leave your stomach. Once you get paid, guys, the pleat that you just sucked into your office chair starts to loosen. And you're going to go break even. You're going to say, not only did I make money, not only am I successful, not only am I gaining confidence, I have absolutely nothing to lose. And this reminds you that the whole purpose of your short trade was for this look right here, because you had odds favorable momentum and absolutely nothing in the way, because you are in the best trade possible. And you're going to hold for that second target. You have nothing to lose, everything to gain. You've already been paid. And guys, your second target is only $200 away from your entry. Remember, the KISS plan is building confidence and trust in the methodology. There will be time to hold for bigger moves. There will be time to capture more money, to trade more contracts. But in the beginning, keep it simple, keep it focused. Let your management plan be just as mechanical as your entry plan. Because guys, that's what helps remove the emotion. And let me show you something. $300 a day is a $75,000 a year. Find 2 of those, you're at 150. Find 3 of those, you're at $250,000. Guys, I'm telling you right now, it's not about making all the money. It's about making the easiest money, the best money, the highest probability money. And that's exactly what the KISS plan does for you. And I have, believe it or not, had people use this KISS plan and get funded in prop firms in their first 30 days. Morning, Jay. And this is your first trade, guys. This is the first page on the KISS plan. The second page is for that 50-50 trade. And that 50-50 trade is a different trade. And that 50-50 trade has a different set of rules. But this KISS plan for the 50-50 is designed to optimize your chances of success with the 50-50 trade. This is the best of the best, guys. The 50-50 is the most lost trade among new users because you get so excited about momentum, you forget that your path isn't clear. So, to take it the best, you have to be from a strong top or bottom. That termination that reverses the market. And if you didn't study that in the high probability trend trade, you will struggle with this trade. If you can't identify momentum or you convince yourself that weak triggers are good, you're more likely to fail this trade. And guys, divergence is a loss of momentum. And if I have a loss of momentum and I don't have a clear path, guys, I'm setting myself up for failure. It takes momentum to break areas. But if all of those are true, I enter the area. It's a different set of circumstances. And then it reminds me, divergence, no trade. Management's different. But look what it says in management. If divergence prints, exit the trade. Can any of you new users take a guess on what the biggest killer of a 50-50 trade is? It's divergence, ladies and gentlemen. Divergence. Divergence kills 50-50. Does it always kill 50-50s? No. Of course it doesn't. But it sure killed that one. And you probably took a loser. Let's see if we can find another 50-50. There's one right in the middle of the night. Let's see what it looked like. That area had the potential to break, but it didn't. Let's see what the high looks like. Son of a gun, divergence again. You guys see it? I don't have to hope that an area breaks. I can wait for an area to break. And once it breaks, and I have odds favorable momentum, let's see what that circle looks like. Oh my gosh, pulled right back to a mid-band, but it was on the wrong side of the triggers. Maybe not my best entry. Guys, this is what we do every day. Do I have odds favorable momentum on the S&P right now, currently, as we speak? What do you guys think? Does anyone have a guess? Ron says no. Ron, Wayne, I agree. The colors don't match. There's no separation. Hell, do I have a clear path to the downside? What do you think? Nope. Do I have a clear path to the upside? No. How many of you are going to try to take a long or a short with this look, hoping it works out? Hopefully none of you. Absolutely, Josh. So where was it? Hold on. Let me figure out where it was. Okay, it was this one right here. So here's my circle. And if I scroll back on my small chart, all right, I'm gonna get rid of my cheater. Let's define an entry area. You ready? Momentum clear path, right? You feel good about it? Large chart looks good, doesn't it, guys? Boop, boop, boop. There's my reversal bar. At the time of the reversal bar, from the top of the triggers to the bottom of the triggers. This is your best of the best, guys. This is what we're looking for. And honestly, you could have very easily put an entry right here. And that would have gotten you in. Let's see. 1, 2, 3, 4. 4 ticks below. Josh, I actually made a mistake. I didn't look at that line. The KISS plan says that your stop goes 5 ticks below the trigger lines, guys. Your entry was at 57. The bottom of your trigger was at 56.75, which means that that would have been your KISS plan stop. Right there, Josh. I made the mistake on that one. And that one worked out. But let me find one on the wrong side. But guys, that's exactly what it looks like. That's why we go 4 or 5 ticks. That's why we don't try to hug it a tick or two. Because let's be honest, the market bounces a little bit. I know I have pictures of it. So let's say hypothetically, I'm looking for a long trade here, right? I have a 50-50, Josh. No, that's not a good one. Down at the bottom. Let me find one at the bottom. It doesn't happen a whole lot, apparently. I'm going to find one for you, though. Promise. Apparently the market's behaving an awful lot. I mean, come on. All right, so this is the look right here, Josh. If I'm looking for an entry, sorry guys, it took me a second. The S&P has really followed the plan. Somebody gave it the KISS plan. So if I'm looking for my entry, Josh, I know that price is likely to return to the triggers, right? And guys, this is common, and this one worked out, but this is not usually the case. Once price gets to the wrong side of the triggers, once price gets above those triggers, Josh, the reality of it is that you don't know if the mid-band's going to stop the market. You don't know if it's going to go up to this. You don't know if it's going to hit these. You don't know if it's going to hit a large chart area somewhere above. So guys, one of the reasons that I say areas inside of favorable large triggers is because when you have a bounce point that is also inside of a correction point, the likelihood is better. So Josh, if the large chart was strong, if the path was clear, and this, my only line was on the wrong side, this is where you guys say, you know what? Everything says down, but I don't know where it's most likely to go down from. So I wait for that reversal bar, because once I get the reversal bar, my risk is established. Rob, you're in Discord, brother. You wouldn't have been able to type in here if you weren't in. You literally posted your message in Discord. Does that make sense, Josh? I hope so. Cool, 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 cool. And it did end up breaking down directly to support, guys. We're kind of going through it. Rob, are you having trouble seeing? Oh, I don't know how to run Discord on a phone. On your desktop. So on you have to log in, that's for sure. So whatever login you used on your phone, Rob, you have to use the exact same login on your desktop. If you wanted to, you could probably have Jason help you out with that. He's going to be able to do it a lot quicker than I am. I'm not a good tech guy with Discord. I struggled with it immensely in the beginning. All right, so everybody, what we did this morning, let's recap. And I'm going to go back to the thing that I told you I was going to do. We learned the trigger line and the Fibonacci rules for when it was okay to trade, guys. We talked about them individually. We looked at them as pictures. We learned how to type exactly what the look is on our chart so we can commit it to memory. I gave you a spreadsheet so that you can catalog those pictures so that you can find these patterns easy. And guys, I've given you a plan. I've given you everything in my arsenal that you need to be successful with the software. This is where we change the direction, right? My part's done. Not done. But my part has been fulfilled. My obligations have been fulfilled. I've given you everything that you need to be successful with the software. Now it's on you. Nanda, Sid, all you guys. Now you have to practice what you just learned. Now you have to post your trades in the chart to make sure that you're following the rules, that you're taking the correct trades, that you're trading with advantages. Now you need to track your real-time performance and use that spreadsheet because repetition creates recognition. I have just given you the world's greatest hammer. The world's greatest hammer. All you have to do is learn how to swing it now. And for those of you that are new, and guys, this is cocky, I know it is. I want you to go back and I want you to use that idea that you can test this methodology, that you can practice this theory. When the rules are met on the large chart, circle a tail. If it comes back to areas inside of triggers, you have a trade. I want you to go after this and I want you to study it hard and I want you to do it with the idea that you're going to prove me wrong. That you're going to be able to come back to this room and tell me, Mark, the KISS plan doesn't work. Mark, waiting for entries doesn't work. Mark, taking profits at areas doesn't work. I want you to come back to me after your study. And what happens is you're with me forever. And guys, that doesn't mean that you're going to be great once you learn these things. You're going to have to go through it. You're going to see more, do more. But once you have the foundation, you're unstoppable. I firmly believe that. So I'm going to take a break. I'm going to go stretch my legs, guys. That was a great first hour. The rest of the classroom is dedicated to your questions, dedicated to your pictures that you post, dedicated to the things that you need help with. Every time you post a picture, here's my request. Talk about momentum, clear path, and entry every time. Don't tell me that you got stopped out. I'll see it because you're going to show me your entry and exit. Don't tell me that you're pissed off about it. There's no reason to be pissed off, guys. The market doesn't care if you're mad. Why do it, right? The only person that suffers is you. Every time you take a trade, talk about momentum, path, and entry, guys. And if you repeat this process, if you study everything that you do, if you go back and look at these pictures in the journal, you're going to see momentum, path, and entry over and over and over. And the goal is for you to just get good at this so you can read your indicators in a moment, right? So what's the market doing right now? The market's at support. I don't have a short trade. Nothing to do. How quick was that? Uh-oh. I have odds favorable momentum and the potential to break, but I've got two divergences on a 50-50 trade. That may not be my best option because the small chart is showing me a loss of momentum and I'm hoping that areas break. Maybe I should let it clear. And we'll see what happens. I'll leave you guys with this one. Look at that. Termination to the freaking tick. I'll see you in 5 minutes. Go stretch your legs, guys. We're going to have some fun in the second half. start my favorite part. Let's do some feedback. So I'm going to scroll to the very top of the chat box, and what I do is I go through each chart that's posted, and we talk about momentum, clear path, entry areas, guys. If you're working on a new trade, let me know. I'll give you my 2 cents on it. Just make sure you write your rules. So Joel got us going today, as he usually does. I love that. And we're going to take a look and we're going to see what Joel's been up to. So he says he's taking an HVA trade. I know that because I've got his checklist right in front of me here. So Joel says, check it out, Mark. I had a termination condition. Like the market came back, hit it, nothing broke through. Heck, my triggers didn't even roll. And then off of that termination condition, I get this white bar from the correct side of my fast triggers. And this is a little more advanced trade, guys. Not really an HVA trade, Joel. HVA trade was down here at 2280. You kind of catch it on the way up, which is perfect. You get above everything and then get out at the next trouble spot. And guys, this is one of the ways where you will be able to capitalize on these great tops and bottoms eventually. You'll get to the point to where you'll say, oh my gosh, this super key area just held. My indicators say we're most likely to go up. Let me find an opportunity to go up with it. And Joel, you did this one beautifully, man. Really nice job. And then once everything is up, not a clear path. We do have momentum, but we're relying on the potential of this area to break. Does that make sense, Joel? The smalls have made it through, but the large are still lagging a little bit. So it's got the potential. And then your entry, so what happens is you're on the wrong side of the triggers, right? And Joel, this one looks like it worked out really well, but I want you to see something. I have the potential to break, right? And then Josh, my areas are on the wrong side of the triggers. And I don't know if the area is going to hold or break. And I'm not sure if that mid-band is going to hold. And this divergence creates problems. And then one of the things you can do, guys, you can say, man, this was coming from a great bottom. I have the momentum, the potential's there. There's key areas in the distance. Let me wait for the market to head in the direction of my trade. And it cuts a little bit of the profit out, but what it does is if that area is going to hold, Joel, it keeps you from just getting run over. You've got that established risk. Because if your stop, and let me break this down into the verbiage of the rules. If your stop has to go 4 or 5 ticks below the triggers, if your stop has to go 4 or 5 ticks below the triggers where the market shouldn't go, it doesn't make sense to take an entry 4 or 5 ticks below the triggers, does it? Could I put a limit order just above the lower synthetic fib? Right here? Let me make sure that I mean, Wayne, you can do whatever you want. Have you heard in the room about the idea that this is where I expect price to return? Whoops. This is where I expect price to return, somewhere inside of those triggers. I need an area for a bounce, Wayne. I need something for it to bounce off of. My bounce point is on the wrong side of the triggers. You could do that all day long. But the reality is you're giving away half of your entry rules. And this is also the NASDAQ. And guys, on the NASDAQ, fighting those small triggers, look how everything pushed below, right? Get that reversal bar. Make it confirm, guys. If it's not perfect, make it confirm. And it's not that the entry isn't perfect. Guys, the path isn't perfect. What if it touches the... Wayne, you can do whatever you want, brother. I don't tell you how to trade. My job is to give you the highest chance of success. Taking a 50-50 with divergence in areas on the wrong side, I'll never support that as your highest chance of success. But if you're willing to take that chance, I want to be on the good side of things. That's just me. You could take any entry you wanted to. Hell, Wayne, you could get in up here and put your stop way down here and hope it doesn't go. Yeah. The logic is that once I'm on the wrong side of these triggers, I don't know. And then Wayne, have you ever, I don't know, you may have been active last time we did it, but when I talk about the NASDAQ, one of the biggest killers of trades on the NASDAQ is fighting the small triggers because it's such a larger chart than the normal entry chart. So if you already don't have areas inside of triggers and you're fighting the small triggers, the close on the correct side at least gives you a fighting chance. Remember the lesson yesterday? As long as it doesn't close on the wrong side of those triggers, it's going up. It's kind of the opposite side of that. Once I close on the correct side, I have a better chance of it going up. So I love chart reading. I really do. But the one thing that I have to do is I have to insist that my chart reading tells me that my rules are met. And the second I try to read over my rules, I'm in trouble. It's a good look, Joel. And here's a good example. Once again, let's take a look. You have odds favorable. The path is clear. Pulls right back to support. And you didn't catch that one. And it moved 20 times speed. That happens sometimes, right? I think it was right at news, Joel. And you took the shot, and it was pretty easy all the way up. And it was right at news. It was like a minute right after the news release, or right when the news release happened. But this is perfect. Momentum on every chart, clear path, pulls back to support inside of triggers. Your stop keeps you safe, or it would have, but you get in on the reversal bar. And pretty easy money. And guys, it's just that confirmation. Establish your risk. This is a great trade, Joel. Oh, that wasn't this morning, though. And there it is again. Weaker triggers, but still strong, not odds favorable. Wrong side of the triggers. If you wait for the confirmation bar, there's no area inside of those triggers. And this is where I go language, and I know this annoys the hell out of you guys. And I'm okay with it, by the way. This is where price is likely to return. There's no areas inside to create a bounce. We're just going by the language, right? Is it going to be the mid-band that creates the bounce? Is it going to be the fib that creates the bounce? Is it going to pull back to this fib or to this mid-band? Guys, once you get on the wrong side of things, you just have to accept that you don't know. Confirmation bar. Even if you don't wait for the whole bar, get in at the halfway point, but force that market to go in the direction of your trade. Because there's nothing more dejecting than getting in at a mid-band and having it go to here. You take the loss and then it leaves. Just little heads up. Oop, and that's the NASDAQ thing. Joel, great pictures, man. And guys, reminder, Joel's at a place in his trading where he's very in tune with patterns. So when I talk about the areas aren't inside of the triggers, guys, when I talk about it's not a clear path, I'm giving these lessons to the brand new users. I'm giving the lessons so that you guys that are brand new can see the difference between the perfect trade and really the trades that you guys have coming. Once you learn to read your indicators a little bit, plans change. All right, Jeffrey Dean. Saw that price was coming back to one-to-ones. Large trigger, set the limit, tighten your stop, made a little money. So I can't see where you're coming from. We've got, man, I don't know why you did it. What's your large chart read? And guys, this is... No, Joe, you're doing great, man. You're doing great. So the trend is down. Don't have a clear path, right? Not yet. It's struggling right at this area. It's coming off of a strong bottom. Your range chart says down but strong. There's a lot of conflict. I like your read about this area with the potential to go down, Jeffrey. This is one of those times where it had just as much potential to rocket up off of support. It's an interesting look. If this was coming from a termination condition, so check it out right here. Termination condition, Jeffrey. It's the exact same look, right? Just about at the exact same spot. But this one has the support that's reversing the market as it comes into it. This one looks like a bad top, and this is a perfect place for failure. How did you decide on your stop placement? Because you're already on the wrong side of all the areas that you're hoping stop the market. Does that make sense? I don't understand the rules for your trade. I know that you're recognizing a pattern, but I'm not good at it yet. So I have to ask. And guys, a lot of times I'll do this. Talk me through it. Because you're teaching me, and I love it. Ask Ron. Ron taught me. Just because I say I don't understand your trade doesn't mean it's the wrong trade. It means that, man, I'd love to see your rules written out. Because if it's repeatable and awesome, hell, I want to take your trade. Let me show you something. And Jeffrey, just so you know, I'm not beating you up. Dun, 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 dun. Let me see if I can find the one that I took this morning. It's the same look. Coming off of support from a bad top, everything rolls. It's the same look. But I have a set of rules to do it. I'm just hoping that you do too. And guys, one of the reasons I talk about rules so much, one of the reasons why I push that so hard, and adherence to the rules, is because remember that the rules have been proven to win more than they lose. That's the only reason that they became rules. And Jeffrey, I believe you're onto something great here. But define it. Define where it's coming from. Define the trigger look that you need. Define how you pick your entry. And what that does is it makes it repeatable. And it makes it testable, even more importantly. It means that you can scroll back, Jeffrey, over 10 days and find that exact same look. Take 50 pictures, and then you can create an expectation for the win percentage. And that's one of the reasons why I think annotation is huge, guys. Termination. Oh, check it out, Jeffrey. This is kind of it. Adriana's chart. Termination. Small triggers are super strong, right? She lets it break and pull back. Gets paid. And then when divergence prints, holds maybe a little longer than need be. Nice job, Adriana. Good looking trade. And then Jeffrey, here's your trade. Right? Divergence, usually mid-band holds. Adriana, are you in here? I saw that you said you were back. Okay. So if you have divergence from the middle of nowhere, you're saying that the mid-band typically holds, which means more up? Or the mid-band holds down? It's okay, because you went short, right? You're saying, I'm going to take that shot at the short the same way I took the shot at the long here. It's virtually the same look, Adriana. This one has a termination condition to push it. This one does not. Do you see the difference? One's coming from a key Fibonacci area. One is coming from the middle of nowhere. This one has a better chance of winning than this one. And it's subtle, right? And then, Jeffrey, this goes back exactly why I say, hey, let's figure out a plan. Because it looks like it might be a good-looking short. But you got stopped out, which is okay. But I think that that's the biggest difference there. Where is it coming from? If I'm just going to fight some stuff a little bit, right? Where is it coming from? Do I have that advantage of a strong top or bottom? And then it does end up going down, doesn't it? But there's a fight at the key area. I want you guys to see this picture. And let's just see if it happened. I hit a key area, and there's a big bounce. And at the next fib, there's a bounce. And when it hits this fib, there's a bounce. And right around this fib, you can see those little tails, kind of a little fluctuation. And right at this fib, there's a bounce. When I told you guys that decisions are being made at key areas, that's a great illustration of it. Why does the market always seem to bounce and fluctuate when it hits a line? Because that's where fights happen. That's exactly where fights happen. And I think that it's a pretty good one here, Adriana. You just got caught up in the fight. The sellers wanted it to go down. Your small trigger set it, your large trigger set it. But because you were right on top of that fib, you just got caught in the fight. Does that make sense? But once you got away from that fib and the triggers start breaking and the momentum establishes itself, it's pretty easy for you to go down with that momentum, even with just the potential to break. I like this trade. Good one. I don't know why you got stopped out here. I don't see the trade. You didn't want to show me that one. Oh, maybe that was your target. That was your target from that one, right at the fibs. I love it. And now we're at a termination condition. Where did this one happen? I got it now. I'm with you now. 95, 95. So that's this 50-50 trade. And you didn't catch it because all your areas and all the indecision, right? Maybe your reversal bar didn't quite catch the reversal bar, so you catch it on the way down with odds favorable momentum. And take it right to the fib. And this is beautiful, Adriana, because as long as you're on the left side of those small triggers, it's going down. And when you have momentum on both charts, it's more likely to go down. And then you had, I'm not sure what your confirmation was. Nicely done, Adriana. Trading with the trend. Give it room to run. Pays dividends. It really does. Nice trading this morning. Dun, dun, dun. Let's see who's next. Steve Diego. Some of the best annotated charts you'll ever see in this room. Hopefully he did it today. All right, let's see. Weak top. On the NASDAQ, Steve, this is a strong top, brother. Well, not where you got in, but... So the white bar, Adriana, you use that from tops and bottoms. What you had was a trend trade. It's a completely different trade. Your white bar is from tops and bottoms. So Steve, on the NASDAQ, and guys, if you're a NASDAQ trader, these pink 1-to-1s are terminations. These pink 1-to-1s are just as powerful as the yellow 1-to-1s. This is the only market. No, you're doing great. Let the rules be met on the other charts, which you did awesome. And then confirm. So Steve, we can call this a perfect termination condition because it's the NASDAQ. Because this is a 34, not a 13. These pink 1-to-1s carry some weight. So what you did is you took the termination, you had it confirmed, there it is again, and you get the white bar. So Adriana, here's the white bar trade. Terminations on all charts, white bars, fast triggers roll, pull back to those triggers, just like Steve did, and hope it goes down, and sure enough it did. Beautiful. Great trade, Steve. Does that make sense, all you white bar traders? First it's a termination, then your fast triggers roll, and then you take the pullback to those fast trades. Exactly, Adriana. White bar and HVA trades happen right at termination conditions. Ooh, I've got a great picture for that. You know me, I love my pictures. So termination Your first shot is the white bar, and then it's the HVA, and then it's the trend trade. And then when you reach the next area, if it breaks, you start back at the trend trade. If it holds, you go back to the white bar, to the HVA, to the trend trade. They're kind of in that order. The white bar is the first shot at a great termination condition. And it doesn't always work. But when you let the pattern do what it's supposed to do, that's a pretty good one. Nicely done on that one. Haji, I pay attention to him on the NASDAQ. I pay attention to him on the NASDAQ, especially the large chart. There you go, Wayne. You waited for stranded buyers to print? Okay, let me look. Oh, I got you, Wayne. Yeah. Could have just got it. So the rules say step back to the small triggers. There you go, guys. That one's in the room. But if you wait for confirmation, dude, there's nothing wrong with that at all. I like it. Why not, right? Why not give yourself a little confirmation in the direction? It's your money. Take care of your investment. Beautiful work, Steve. Guys, this is where if you're brand new, you're headed. A lot of these trades that we're looking at, these aren't high probability trend trades. These are trades that when you're comfortable reading your indicators, that really start to jump off the page at you. So let's see. I'm going to get you on language. Is it strong triggers? Odds favorable momentum, Steve? Or are your smalls inside of the large triggers? I see weakness. And I also don't see a clear path. Am I reading this wrong? Smalls are inside, not piggybacking. They were up here. Oh, here's our lesson. Okay, here's our lesson. Cool. So let me show you exactly what happens. So the piggybacking, Steve. Oh, this is an awesome lesson. Thank you for this. Does everybody see how the small triggers are riding those large triggers? And you can almost see the dashes of the large triggers through the small. That's this piggybacking that Steve's talking about. So when you see this look, and you've had 30 or more bars without a reversal bar, that's a strong trending market. Assume rule 1 is met. Yeah, so red eye, that white bar is on a range chart. Right now, we're keeping you a little focused on 2 charts, momentum, clear path entry. And the range chart is something that you'll be able to incorporate into your trading once you get comfortable with the rules on your Renko charts. It's a little more advanced trade. Guys, is everybody good with the, and Steve, this is exactly what you were thinking, right? Piggybacking, strong trend, everything going rock star. So this right here, Steve, ends it. Once you get a reversal bar, it's done. No, you're good, Red Eye. And then once it's done, it takes another 30 to get it going. And these are inside. So this is clearly a market that's pushing down, but the momentum isn't there. It's just not. But that's a good lesson. And this one worked out for you. And then let's look at what you had going on here. And fib update came into the trade. So what you had was momentum and a clear, or you had weak triggers, clear path, perfect entry. Is that fair? And watch this. This is the high probability trend trade, right? You still had 66% of your advantages, Steve. You took the absolute perfect entry for a medium probability trend trade, and you took it all the way down to the fib. And then when the fib update came, you took the momentum to finish it. It's a beautiful trade. But because this is a learning environment, guys, because we're all here and we're trying to get the basics as well, I just like to make sure that nobody sees his annotation in this trigger look. I've got to correct it. Doesn't mean that it was the wrong trade, Steve. I think you absolutely killed it. Adriana, he took a pullback to an area inside of favorable large triggers when he had a clear path. Does that make sense? That's all it was. And then with the clear path, this was a fib update at 8 a.m., so these weren't here when he entered this trade. He knew exactly where his target was. And he found a way to add a couple contracts in there on the way down, which is awesome. Awesome. Does that make sense, Adriana? Great trading, Steve. Really nice trading. You had 2 out of 3, and great entries create manageable trades. You had virtually no risk almost instantly. It's fun when it works out like that. All right, let's see what's next. All right, Jeffrey Dean. Oh, we saw that one. That's a rerun. All right, guys, let's talk about clear path and momentum. Price clears trouble. Nothing in the way. Super powerful. Since it's only momentum, in and out. The 5-1 exit marker's in the wrong spot. Happens sometimes. All right, I'm going to show you guys the little epiphany that I have. Do I have some people that are taking this chili dog trade as we talk about, as we say it? Because one of the things that Ron says is price clears trouble. And I don't think that you guys understand the brilliance of price clears trouble. And allowing the back of the bar to clear trouble. And the reason it's so smart, and I was talking to someone about this trade, and they're like, Mark, once it gets below that area, it seems like it accelerates so fast. And the reason for that, guys, is areas are where fights happen. And areas are where decisions are made. And areas are where the buyers and sellers come out of the woodwork and they fight for supremacy. And as long as your price bars are dancing on top of that fib, the likelihood is that there's a fight. Does that make sense? And what Ron realized long ago is that once the price gets below that fight spot, well, the sellers won. So it stands to reason that they're going to accelerate like a bat out of hell because the buyers are less likely to fight them below the area. And that's why when you take these chili dog trades, they go fast. Because you're waiting. You're waiting for the fight to be done. And then once it is, it's easy, isn't it? I love this trade, guys. This trade confused the hell out of me for a long time. Because I kept trying to take it before. Ron. I kept trying to take it before it cleared. And look at how many times not clearing screwed up your good time. Guys, this is a great lesson. And this is one of the things that I like to do. When you guys show me a trade, I like to try to figure it out. And Jeffrey, that's one of the reasons, again. Dude, tell me your rules. Tell me your rules, because I'll go from your rules and I'll start looking for all the reasons that it's an amazing trade. And I'll also look for the things that may create challenges. And that's exactly what I did with Ron's trade. Up 9,000 by 4 a.m. 20 grand over the last 2 days. Pete, that's amazing, dude. That's amazing. 20 grand in 2 days. Does it work? Hell yeah, have a plan. No, you're great. And eventually, I'll be such a pain in your ass. You'll be like, I have to annotate this just to shut Mark up. Sticking to my rules kept me out of this trade. Triggers rolled, separated, odds favorable momentum, clear path to fib. Did not have a clear path to fib, Pete. You were directly into a termination condition, 100% into a termination condition, without question, into a termination condition. So guys, this is where I ask you for my new users. Price reaches an area the triggers didn't break. Does everybody see that this is a textbook, 100%, rules met, can't deny it, area that may stop the market or create a reversal? I want to make sure that you guys see it. He said clear path to the fib. I say not quite. And guys, it kept him out of a loser. And he said both small triggers need to be through the termination condition. So here he called it a clear path, and here he called it. But guys, the reality is he's got so many repetitions under his belt that no matter what he types here, he knows what he's looking at. And we will misannotate every now and then. But because, again, we're a learning room, I like to address those. Kurt says, once the sellers win, the buyers capitulate. And then for them to get out of the market, they become sellers. That's probably why the market continues. Yeah, that sounds like a good theory to me, Kurt. Sounds like a good theory to me. All right, who's next? We're about to go to the Wayne show. We're getting close to it. First, we have Morgan. Morgan says, Mark, strong bottom, odds favorable, one divergence, perfect entry, money, and he knew where those one-to-ones were. Guys, this is brilliant. Morgan said, look at this. I have to get paid on the way up before I hit them. And if you guys remember right, 71.53, reverse the market to the absolute tick. And Wayne, we looked at that one. And then Rob, we looked at that one. All right, here comes the Wayne show. We got 5 of them. I love that. 1, 2, 3, 1, 2, 3, 4, 5. I like to get rid of some of these. Things tend to load easier. All right, Wayne, let's see what we did, bud. Marga doesn't make it. It's a 50-50. There was no divergence, so you take the entry. Welcome to the ugly trades. Man, this isn't an ugly trade. I will. No, that's okay. Take care, Ron. Chili dog omelet. I've had those. They're good. All right. Thought this was going to be a trend trade. Bought the reversal bar from the mid-band. Saw that it was going down as your white bar trade. Got in 1 bar late, 34. All right. So the long trade. Wayne, let's talk about it. Do you recognize it as a 50-50? The smalls are peeking their head through. The large are lagging way behind. Cool. So one of the things that I like to say, when it's time for a 50-50 trade, Wayne, I love the small triggers to smash. I like them to get like 3 or 4 points through. 2 or 3 points at least. And when they kind of prairie dog here, I get my guard up a little. You took a great entry. Everything about the entry made sense. From the area, would have been better. But you catch it on the way up, no worries. The only thing that I can say on this one, Wayne, is when you know that the area is not broken, you've got to look for signs. And your small chart told you with absolutely no question, Wayne, we're not going up. But you only had 35.7, 36.4. You only had 7 ticks before you got to the trouble. So you just didn't have time to, you didn't give yourself enough room to manage a medium probability trade. But when we talk about the 50-50, and let me go to the KISS plan again, guys. First contract or at trouble spot. and then break even. And this is one of the things. $100 or first contract. So if you were following the KISS plan, you made 70 bucks at the line and you didn't lose right here. Because if that line holds, you can always find another entry. But I like the look. But I mean, the KISS plan tells you, you have to be able to identify the trouble. You got to be willing to get out at it. These are not home run trades. And then when it does fail and everything rolls, you go short with all the triggers above support. Momentum style, Wayne. This is your loss of momentum. And you took your stop directly at the area, right at the triggers with everything going down. So the lesson on this chart, and this is for everybody, not just Wayne. The lesson on this chart, if I know what kind of trade I'm getting into, I have a plan to manage that specific scenario. Which means, because the first trade is a 50-50 trade, I need to manage at treble and get to break even. Because the second trade is a momentum trade, a loss of momentum makes sense for the exit. And if my momentum trade fails, I can look for the opportunity for the trend trade, which is exactly what you missed because you were getting stopped out at the trend trade. Does that make sense, Wayne? And really everybody. Once you know what kind of trade you're getting into, then you have a plan to manage it. Sometimes I worry that I'm annoying you guys, but I think the reality is I don't care because my annoyance tends to build good habits in you. And this goes back to the idea that you have to know before you sit down to trade, guys. Why am I going to enter and why am I going to exit? And why we focus so heavily on the high probability trend trade first. Because that's the one that teaches you to read your indicators, and that indicator reading is what opens the door for better management. So if I'm in a high probability trend trade, I have to know what it's going to take to get me out. Initially, it's the KISS plan rules, right? Because I'm learning to read my indicators, I'm practicing getting paid. And then you start to see other things that create exit conditions. But if I'm in a 50-50, it's a completely different set of management rules. And if I'm in a momentum trade, it's a completely different set of management rules. And if I'm in an HVA trade, it's a completely different set of management rules. So understanding what it is you're getting into pays huge dividends because it allows you to manage accordingly. So great lesson there, Wayne. Thank you. All right, let's see. All of my triggers are above. My large triggers are flat. My small triggers are flat. Don't have an area inside of triggers. Jump in at the small triggers. And it just doesn't work out, right? Directly into terminations. All the triggers are above it. No areas inside. And it's not even a white bar trade. Because, Wayne, the first rule for Fight Club, for white bar trade, is from a termination. You're not at all. Your triggers are above everything. So we broke rule 1. And if you were going to do it, that was your entry right there. That's okay. And guys, I'm not beating you up. And then this is you're just trading into everything and it just doesn't work. And once again, if you're jumping in, right, at least you didn't take a big hickey there. But I think it's important to break your rules every now and then. Not on purpose, but every time you break your rules, guys, you're opening the door for a lesson. Every time you break your rules, you're getting this idea of how it's going to be easier to follow your rules. Welcome to the FOMO Express. I love it. Oh, he knew, Steve. He was being a smart aleck. So let's check it out. Up with strength. Not quite to the one-to-ones. You get in, you catch it at the one-to-ones. I love it. Everything says strong. You get in, you get paid. Everything's still going up. You get in, you get paid, but you hold it too long. If you remember what kind of trade you're in, allows you to manage it. Everything's still going up and momentum in and then get caught out. And I think that's the biggest one. If you're going to take the momentum trades, I can't stress this enough, guys. As long as you are right at these triggers, it's going up. Once you get a reversal bar, stop looking for the momentum trades. It's okay to take an exit. And Wayne, you're really good at self-diagnosis. Everything says down with crazy momentum. You take a pullback. You miss the area inside of favorable large triggers, but you get in on the reversal bar, waited for the confirmation. And I don't know if it slipped you. It may have. You may have been up high. I think you were up higher than that. It just kind of looks weird. And with all of that momentum, you're hauling ass and you get out right here. And the second one's at fibs. And man, Wayne, this is the atonement trade, right? Wasn't this one easy? This one looks like effortless. And that's one of the things that you'll realize, guys, is the more advantages you have, the easier your trades are. And it doesn't mean that you're immune to the FOMO Express, right? It doesn't mean that you're immune to breaking your rules. But hopefully we go through enough of these and you really start to believe it. Has it been paying dividends for you, Steve? I love that. I love that one. Odds favorable, clear path, perfect entry, money, money, another trend trade, beautiful. And I love your exit, man. Beautiful trading, Wayne. Great job, dude. Small's got inside of large, so you set the target just above the fib. I mean, my gosh, what an amazing plan. I'm losing momentum at a key area. Let me get paid. I'm losing momentum at an area. Get paid. What an awesome target. Wayne, you look like a freaking rock star. You got out one tick above where the market reversed. You knew where the market was likely to go. That is how you keep the most money in the bank. I love that. I love this one too. Another great exit. Guys, I get excited watching you grow with the software. I get excited seeing you go from a good trader to a great trader. Go from a confident trader to like a super, oh my gosh, I'm amazing, awesome trader. And then Rob, that is perfect. Synthetics are great. Always a rough day when Morgan says posting for accountability. Not really. Strong top, beautiful. Odds favorable, absolutely. Potential to break, for sure. No divergence, absolutely. Rockstar entry, so sexy. Stopped out. Morgan, run a lap. Whew. Gave you the golden freaking goose and you just turned it into fried chicken, right? So what's the lesson? You got to trust your plan. You really do. You have to trust your plan. And guys, it takes time to trust a plan, right? You meet a brand new girl, she's super pretty, but she asks you for the keys to your car, you don't say yes. You're like, let me make sure you're not psycho. And you just see it through. And guys, that's what simulator's for. I can't stress this enough. Simulator is for building trust. Simulator, and you guys that go live too soon, you've eliminated that trust building. You're outside of the circle of trust, which makes holding moves difficult. Beautiful trade, Morgan. Shame on you for that exit. And guys, I've known Morgan in here long enough. I'm comfortable. I'll pick on him. Trigs rolled, separated directly into a termination condition. Guys, that's the annotation I want to see. That's Pete saying, Mark, I'm going to tell you exactly what I'm getting into. Was so excited to take this home run. I got in early. No, you got in perfect. No divergence, strong triggers, perfect entry, super low risk. And then Wayne, here's that same lesson. When you know that it's trouble, sometimes you got to get out of trouble. And man, you did a great job. You did a great job on this one. I don't even think Pete's in here. He made 20 grand the last 2 days. He was out shooting golf. But isn't that cool? I know there's trouble. I'm going to get paid at trouble. And here's the thing, guys. That is 19 contracts for 9 ticks. So I want you guys to see this real quick. That is 19 contracts for 9 ticks. That's a $1,700 trade that failed. This is what happens when you start learning to read your indicators and understanding what you're getting into. What a great follow-up to that lesson that we just had. I love it. Love it, love it, love it. I don't know about you guys. I'm having fun. I hope you're having fun. Hope you're learning something. New users, I hope this isn't overwhelming for you. We're seeing a lot of trades outside of the best, but I keep trying to go back to the momentum. I keep trying to go back to the clear path. Strong triggers, rolled down, separated directly into termination conditions. Once again, no divergence and strong triggers, low risk entry, out at the trouble spot. 17 ticks for 4,200. When you know what you're getting into, you know how to manage it. And I can tell you right now, Pete knew that this could have stopped the market. So Pete took it from the best spot. He had the least amount of risk. And with this level of momentum from a termination condition, that retest is probable. I love your trades, Pete. And my favorite thing is that you said directly into termination conditions, which means you know exactly what you're getting into, which means you know exactly how to manage it. What a gift to be able to do that. All right, Jay. 3 divergences, pivot, stop out, everything rolls. You get short on the momentum trade. When the momentum trade fails, it turns into your trend trade. No worries. And you held it to the fib. Jay. Nice, dude. That was a big move. Every now and then we get those. Every now and then we get those. Pete, what TOD was that? What's TOD? Time of day. Oh, I see. You guys and your acronyms. 645 Mountain. And remember, Kurt, you can go up and you can steal every one of Pete's charts and look at them. But do me a favor, guys. When you steal other people's charts and look at them, don't send them endless messages. Hey, teach me to do what you do. That's nobody's job. That happens a lot. There's a lot of times where people start going, oh, I like the way Kurt trades. Let me bombard Kurt with every question that I have via private email and put the obligation of study and teacher on him. Guys, that's not Kurt's job. So you can do it if you want, but I'm just going to tell you it's probably not that cool. Everything down. The path is clear. The entry is perfect. The money is made. Weak. And he says, I'm not going to sit and hope. Nice job. Let it break. Trade to it. Let it break. Trade from it. Another great lesson from Pete here. Trade to it. Get paid. Let it break. Trade from it. Out freaking standing, Pete. I keep threatening to give you the microphone. It's going to happen one day. All right, Steve B. Always nice to see a chart from you. Oh, you annotated for me too, so let's check it out. Small above the large. So we're talking about this one. 50-50. 1 divergence. Perfect entry. Catch it on the confirmation, not on the way down. NASDAQ scary. Out at trouble. Out at trouble. What a great trade. Nice one, Steve B. Short into the termination, made a little money. Short into the termination, but with all all the momentum, made a little money. Tried to go short against the triggers and got stopped out. You didn't think I'd see that, did you, Steve? Very nice. Pete, I got a 130 today. Today's golf day, guys. I see you up here, Steve. Went back to basics and it killed. Man, Pete, you would be proud of me. I had the worst round of my life last week. I went and played 9 holes on Tuesday, and it was a shorter one. It was par 30. It was 6 par 3s and 3 par 4s. And I got out of that one +2 and counted my penalties. Some of the best golf. Haven't touched it, man. I still haven't touched it. I've got to get my direction down with my irons, and I think that I just have. I will get the driver. I haven't touched it. I got your email. Thank you. I just got to figure out how to work through it. Steve, thank you for saying that. I went back to basics. And it has helped so much. It almost feels like a failure to go back to simplicity. Does anyone else feel that way? They're like, man, I don't want to go back to basics. I want to be advanced. I want to do what I see John Novak doing. I want to do what I see Pete doing. And the reality is, guys, basics pay the bills. Basics pay the bills. And I've had people use the KISS plan, guys, and do like 85% winners. Directly into a termination, no trade. Would have taken trade at fib and large triggers, did not because term on the large chart, following rules saved a loss. Joel, you're on your way to being consistent. You're on your way to being consistent. Guys, you're going to break rules even when you're consistent. Even when you're consistent, you're going to break rules because you're constantly learning. One of the biggest things that I can tell people, and this is so beautiful, one of the things that I can tell you guys, and that's our last picture too, which is kind of cool, is that you're all becoming chart readers, right? You're all becoming these great chart readers. And chart reading tells you whether or not your rules are met. Chart reading isn't why you get into a trade. So I'm going to use this right here. Dun, dun, dun. So for you new users, let's talk about favorable large triggers. So Sid, who else is in here? Nanda, Red Eye. Let's talk about favorable large triggers in expectation of price and triggers, all right? So on my large chart, you guys feel good saying that we have odds favorable, momentum, smalls above the large, larger wide, angled in the direction of the trend. Life's pretty good, right? What a great look. Awesome momentum. It's likely to continue in the direction of the trend. And guys, there's nothing in the way. I haven't even reached the mid band. I mean, what a great look. Can you guys give me a Y if you're with me? Guys, this thought process that we're about to go through right now is going to keep you out of a metric buttload of losers. And this is why I said that the idea of understanding that price may return to the large triggers is going to pay dividends. Because look at this. There's my reversal bar. There's no divergence. There's a mid band right on top of those triggers, guys. And I have to say to myself right here, this looks good. This is the highest point of support. It's right there at the triggers. But Mark keeps saying every freaking day that when my triggers aren't one on top of the other, price may go, and these synthetics are the large chart large triggers. Can you guys give me a Y if you're comfortable with this lesson? Price is likely to return to either the large or the synthetic, and you'll never know which one it's going to be, ever. Not in a million years. Cool, right? So this is where, guys, I talk to myself all day long. I want you guys to learn how to talk to yourself. I want you to say that even though my large chart is awesome, my entry is difficult to define because of split triggers. All right, so far you guys are with me, right? Large chart is awesome, but my entry is difficult to find because of the triggers. I will wait for a confirmation bar since it's hard to tell where it may go from. This establishes my risk. Do you guys remember that? Because if I get a reversal bar, I can put my stop 2 ticks below it. Does everybody recognize how there was no reversal bar on this split trigger look? And if you go through this process, I have momentum, the path is clear, my entry rules aren't clear, my entry isn't perfect, my areas aren't clearly defined, let me insist on confirmation. And if I never get confirmation, guys, I don't take a loser. Does that make sense, everybody? Let me give you guys this picture. Drop this one in your spreadsheet. And guys, in the PowerPoint that I use every morning, I go through the exact same thing. Wait for confirmation. It's okay to wait for confirmation. I crashed my NinjaTrader. I'm going to bring it back up. Nothing worse than crashing in the middle of class, right? Guys, awesome news on the funding company front. My brother this morning, has logged into the funding company and is about to do a test. In technical terms, Wayne, it is effing fast. Here, I'll show you where I'm at. I don't know a lot about what any of this stuff means, I'm not gonna lie. I've got a 12th gen Intel Core i9 12900KF. I believe that's Kentucky Fried, which means that my computer is also delicious. I got 64 gigabytes of RAM. It's fast. I don't know what any of this stuff means. It's NASA fast. But what it is it is top of the line speed. Is it 6 core? And see, I'm telling you guys, I don't know anything about this. So my old computer was a trading computer, a Falcon trading computer, beautiful. I got it from my sister-in-law. And my brother, I think i9 means 9 core, doesn't it? I could be wrong. I don't even know what a core is. And I got this new one, and it was pretty quick. And then my brother goes, we're going to make it faster because my card burnt up, or my disk chip, whatever, burnt up. So he sent me a new drive, new hard drive, and I put a new cooler in it, and man, this thing is crazy fast. Crazy fast. I think about going to websites, and it just shows up there. There's your HVA trade for you guys that are using the HVA. Termination, triggers roll, pull back to that little green line. That's your shot at a long. And your risk is 0.5. That's a 3-tick risk right at the HVA line. Pretty cool, right? Doesn't mean it's going to win, but when I get a termination that reverses the market and everything rolls, that's a pretty good shot. Definitely not a guarantee of a win, because that market's been screaming down. Four divergences in the same price range, right? Should we just try it? We'll try the HVA trade. I'll put my stop below the HVA line. First target, We'll make a little money. Second target, we'll put it at the mid band because the mid band is a great spot for a bounce. And let me show you guys this, the whole thing here. Termination, everything rolls, pulls back to, your entry was 08, guys. I am 5 points late on this one. This is your HVA trade. This white bar that you guys look for, guys, this white bar is what creates the HVA line.
Target filled.
There's my first target. Do I want to go break even? Why not? What do you think, guys? Should we go mid-band or should we see if they really are going to reverse the market today? We're having fun. There's no more pictures to look at. We had a termination. Everything rolled. We took the HVA. We took it late. It can't be here on gold. Same thing. Remember, crude and gold are different. Did we just call the bottom? Did we just see a termination that reversed the market with 3 divergences in the same price range with every indicator pointing up and capitalize? Let's see what they have in them. We can't lose. We've already been paid. But that mid-band, guys, that mid-band is a great spot for a bounce if this downtrend is going to continue. That mid-band is a great spot for a bounce if the downtrend is going to continue. For you next-gen momentum traders, smalls broke through the 1-to-1s. If I get a little snapback here, that would fit the momentum rules. Still haven't gotten to trend trades yet. Well, momentum is over. It's still going. Your money's on the mid-band holding? So Wayne, let's do this. If I get a reversal bar on the wrong side of the triggers, I'll exit. If I don't, we're going to hold for the fib. We'll let the small chart tell us when it's time to get out. We've reached our trouble. I'll give it a reversal bar's worth of information. If I never get a reversal bar, guys, we're going to the next fib. You guys like it? With a strong bottom and all the momentum, I'm going to force it to take me out. I'm not going to just jump out willy-nilly. Neither willy nor willy will work. Guys, this isn't a high probability trend trade. And watch this. Every up bar we get, if we get an up bar, we'll lock in more money. So we'll just see what happens. We're in management mode. Quick profits. We either get stopped out or we don't. Who cares? Uh-oh. Locked in another one. Steve Diego taught me this. He said, Mark, as long as you don't close on the wrong side of these triggers, it's going up, brother. Relax. Life is good. Life is amazing. Momentum is strong. Children are singing songs about me. Women want me, men want to be me right now. Guys, look at this. I love it. This is what we do. This is what you learn. That was a late entry. That $100 should be $150. Oh no, they're so close. They're so close. There we go. We're out. I don't feel bad about that. What do we do now? Now we wait, see if it turns into a trend trade.
Order submitted.
Mid-band's not a termination condition because the large triggers aren't full bar away. Oh, those mother scratchers, they didn't get me. God, can you guys believe that? Can you believe that? Man, that's rude. We had them dead to rights, but our rules said exit, so we exited. What a great thing. Takes a while to believe, Steve. Takes a while to believe. We're still in trend trade mode. Hey, Wayne. With all that money locked in, could have used a little up down, right? A little down up. You know that one. Mid band didn't hold for squat. Not even a little bit. Created just enough bounce because it's an area where decisions are made to take you out if you were in a reversal bar. If you would have taken it off at the mid band, it was up there. Are my rules met for a trend trade, ladies and gentlemen? Do I have momentum? Sid, do I have momentum? Yeah, Nada says yeah. What about a clear path? I haven't reached this area yet, have I? Guys, it is smooth sailing to the upside. So what do I need? I need a reversal bar. If I get a reversal bar, I have to identify my triggers. There's the triggers. Oh, that's too much. That's terrifying. Uh-oh. Now if I get a reversal bar. Uh-oh. Termination.
Order canceled.
My trade's over. Hey, Wayne. This is why we don't guess on whether or not an area is going to hold or break. If you got paid at the mid-band, dude, you're happy. If you got paid at the mid-band, that was a $300 trade easy, right? Now we've reached the termination. Do I take the long? Hold it.
Order filled.
Am I taking the long directly into the termination condition? Where does my stop go? Right about where the market should hit it, right? I just traded directly into a termination condition. I had a lot of momentum. I'm coming from a strong bot. Oh man, that didn't work out. Wow, that wasn't nearly as good, Pete. Yep, 20 ticks to target. Poppycock, I say. Why trade into them? You know where they are. You know they have the potential to break. Guys, this is the greatest lesson ever I could give you. When a termination sets up an HVA trade, take it. Get paid. When you reach a termination condition, sit on your damn hands. There's no reason to give it away. This is where I ring a bell and say school's out or drop my microphone or something like that. If you don't know your rules well enough to have them like just spew from you that quickly, guys, you got to be able to talk it out fast. Wouldn't it suck to make 200 bucks here and then give 200 back here? This is what we call avoidable losses, ladies and gentlemen. Avoidable losses. I love Simulator. I can do this all day. I can take the best trades and I can take the crappiest trades. And all we do is we turn them into lessons. Go recognize some patterns. In the spreadsheet, that's a termination condition. It says don't go short, right? I'm not even done calculating and I can see that a termination stopped that market cold. Not even done calculating. What do you guys want to talk about? I love it when I do this stuff live. Sometimes we take the right trades. Sometimes we take the wrong trades. You got to know the difference between the two, right? Got to know the difference. Guys, I'm going to take about 2 minutes and then we're going to finish strong. So I'll see you in just a second. Pete's a pretty solid trader. He says, Mark, it's not perfect, but with this level of momentum and a strong bottom, there's the potential for a retest. Where's my first trouble spot? How about right there? Where's my second trouble spot? Right there. This isn't in the KISS plan. I'm not going to use the KISS plan methodology. But I did get a reversal bar. I will tighten up. All right, guys, here's a good lesson. If a lower divergence prints, it's even more likely that this market doesn't go up, which means I'll know about divergence. One, I don't even have the potential because I don't see that number flashing. But 2 ticks below this reversal bar marker is where it will be true. So this is Pete's trade. My market flow chart gave me a white bar and turn triggers off of a termination condition. Wayne's short right now. Wayne says, sorry, Pete, my rules are meant for a short trade. Do you see it, Wayne? Wayne, your rules said go short right there. And guys, this is why you can make the choice to trade into termination conditions if you want, or you can always have an advantage. Where are you headed to, Wayne? You coming back down to get that fib? Isn't that awesome? Poor market's stuck and we could make money both ways if we just had a plan. It was low risk, and Pete, you're absolutely right. It's acceptable losses sometimes, right? So if your entry was at 34, you have to make it all the way to 98. You have to make it all the way here. So, Wayne, what happens if you trade into one-to-ones? What happens if there's an HVA line right there? What happens if your large triggers are still up? Are you completely unrelenting? You refuse to get paid at the first potential trouble? Right now, everything says down, but we're at a bounce point. We're at a bounce point. And I think one of the things is I think it's silly to hold for dear life, guys. Read your indicators. The white bar trade is a momentum trade. I'd be half off right at these one-to-ones. Right at an HVA. I'd be half off. Personally, because my goal is to get paid. If it breaks, awesome. I'm going all the way down here. If it doesn't, they can get me break even. I'll wait for the next trade. One of the great things about each and every person in this room is you are all smart enough to find the next trade. You are all talented enough to find the next trade. You don't have to hope a trade works. Get in, manage it, find the next trade, guys. Been a lot of opportunities, a lot of pictures today, a lot of people making money. Following rules, getting paid. That's the goal. Follow rules, getting paid. If you don't know the rules, you got to talk about it. You got to tell me, hey, Mark, I need help. I don't know my rules. So you were in at 18. So you traded directly into the one-to-ones. Didn't let the small triggers break them. Uh-oh. Morgan, have a good one, man. Bullshit, Joe. You know your rules just fine. You just struggle to follow them. How did I know that it was going to go back to that circle? I didn't, Wayne. Don't call your shots, just show pictures. In 2004, Nexgen said that if a termination holds and the small triggers roll, sell a pullback. There it was. And look at that. It went right to that HVA, right to those 1-to-1s again. Isn't that pretty cool? Once you get good at chart reading, guys, you can draw circles and look brilliant. Look what I did. That trade is from 2004. There's no trend trades to be had here. There's no HVA trades to be had here. You don't have odds favorable momentum. Your synthetics are up. Your large are down. Does that make sense, everybody? This was your first shot, white bar trade. This was the 2004 trade. And here you could say, like, if you wanted to be clever,
Order submitted.
with this termination and everything pointed down, maybe I'll take a reversal bar. And if that reversal bar prints and gets me below the triggers, because I'm not going short on the wrong side of the triggers, because as long as it's above these triggers, it's going up. Maybe if I get to the other side, I've got room to come back down and see if they just wanted to hit that fib. It's not a trend trade. Jeffrey, I think this is your trade. Because of the termination, because the triggers roll, because they're getting below, but because I love money, I want them to get to the other side of the small triggers, because I know as long as I don't get to the other side of those triggers, it's going to keep going up. And Wayne, that's an awesome lesson right there. Hit a bounce point, close on the wrong side. Why give it back? Why give it back? Trading is fun, guys. It really is. Trading is good, but the louder you get in your own head about the advantages, the more you remind yourself that the goal is to get paid, the more you talk to yourself about what you're up against. The range chart's telling me that I'm a dumbass if I do anything, Adriana.
Order canceled.
The range chart says that we came from a termination, that everything started up and we hit a termination, that there's no decision in the triggers, they don't agree, that an HVA has held twice, doesn't say anything. Do you know why it doesn't say anything, Adriana? Because I don't have any large chart rules met. I don't have any rules met on my Renko chart, so anything that I do right now is a guess. Is a guess. Closing on the right side, Jay. If I want to be on the good side of those triggers, I can put a stop order on the reversal bar marker, so watch. Once it closes on the other side of those triggers, I'm at least on the good side of the triggers. Does that make sense? It doesn't mean it's going to win, because I don't have rules met. These triggers don't agree. These don't agree. My range chart has fast triggers up, slow triggers down. Guys, the challenge is when you guys keep trying to take trades without rules met. And Wayne, if you took this one, that's a rules-based trade. And then you had to manage out of it. But if you base won't be long, Gary. John is demoing it today. John started the first day of trying to break it. So I imagine next week I'm going to be doing my best to blow out every account I can. I'm going to be fighting triggers and trading in determination conditions. So guys, let me show you this real quick. And let me get everything off of this chart because this is too busy and my OCD is going crazy. Do you see how this is everything that's happening inside of that one bar? When it's not solid here, when there's not rules met here, guys, you're looking at a fight. This is all happening inside of one bar. Everything is leaning down. But those are those fights that we talk about. Gary, I've never had NT8 blow up from hitting my targets. I've never had it blow up from hitting my targets. Now, if you move your stuff around like a crazy man in the middle of a trade, that can jack it up. But just having your target off in the distance and letting it get hit, I haven't ever had that mess it up. I may have different stuff. I do have the NASA computer. Oh, okay. I just hit close if my rules are met. I don't know. Everybody's different. Everything's different. We got a couple minutes. What do you want to talk about? Now every chart agrees. Which direction is it more likely to go? More likely to go down. Still don't have rules for it though. I don't have any rules that say when there's indecision on my triggers, when I'm trading into pivot stop outs, when my synthetics are up but my large are down but my small are on the wrong side of the large. I don't have any rules, Matt. Does that make sense, everybody? Take a picture of this and write a trading plan that says this is your best look that wins more than it loses. You can't. I used to do that. My brother used to say, okay, take that picture, write your plan. Tell me what the rules are for this trade. And those are always fun when you trade into terminations and you have to type out, okay, when the triggers are strong and you reach a termination, make sure that you go long. And then you get run over and you're like, oh, maybe that isn't the good plan. Just a fight, guys. This is all it is. They're about to go to lunch and they can't decide who's paying or where they're going. They're in Chicago, though. It's probably going to be pizza or hot dogs. I guess that's it. Oh, we're 11:50. We still have